there was a particular meeting where Jerome Powell, the Fed chair, head of the committee that looks to set these interest rates and monetary policy conditions in the US, for the first time really started to change their tone from going all about inflation to, hey, we're scared about jobs. And when they get scared about jobs, they start easing conditions, which one of the ones we've seen is rate drops. There's likely more levers they're going to pull in the coming months.
BNB hit $1,000 US for the first time in history. BNB's just going from strength to strength quietly. It kind of flies under the radar compared to a lot of these other coins, which seem to steal the spotlight, like XRP and ETH and Solana. But BNB's right in the mix.
There haven't been the most clean and unclunky experience to do perpetual trading or like futures trading on DeFi applications in the past. So Hyperliquid did change that. That was like a novel solution. Now you're just basically seeing the copy-paste effect. Hey guys, welcome to this week's episode of Tapping Into Crypto. Nice of you to be here, Ted.
Howdy, Pav.
I don't know why, let's say it's not. But we're back again this week. Obviously, we had a couple things we're going to touch base on that have come to fruition from last week, so we're going to dive into that. Going to talk about the dump. Everyone's probably going, what's going on? Not a dump, not a rubbish tip, but the market falling apart. I could see the quizzical look on your face, Ted.
Yeah.
What's happening? Why are we seeing a bit of a downturn? We've also got some interesting news out of the TradFi space with the ETFs going live, some new ones, XRP and DOGE, with XRP setting a new record. So we're going to talk about that relatively soon. But let's kick in. Ted, you want to kick us off? I guess we were talking last week about the Feds and like the rate cuts, and
as expected, Jerome Powell and the Federal Reserve in the US cut rates by 25 basis points, which was to be expected. So I guess the market kind of already priced that in. It's typically when they go above or beyond what the expectation is where markets react. So no surprise there, but it's good because it means they're starting to cut rates, which is what we want to see for more liquidity in the markets. You know, people tend to move to more high-risk assets like crypto, which bodes well for the market, right?
Yeah, it is definitely, like another big check for everyone. I think the biggest thing is everyone's looking at the end of the year, right? Like we've gone on about it. I feel like we've gotten a few guests on in recent time. Everyone's saying Q4.
Yep.
So it's just nice to see the tides continuing to sort of blow in that direction, which is good. But I think that also is a nice little caveat as to why we've seen a bit of a sell-off. Because if you've really been following things, which, you know, it's fine if you're not, but this whole idea of this rate cut really started to come into the fray about late August. There was a particular meeting where Jerome Powell, again, the Fed chair, head of the committee that looks to set these interest rates and monetary policy conditions in the US, they, for the first time, really started to change their tone from going all about inflation to, hey, we're scared about jobs. And when they get scared about jobs, they start easing conditions, which one of the ones we've seen is rate drops. There's likely more levers they're going to pull in the coming months, potentially. With that recent rate drop announcement, we also had the latest forward guidance, which is like, where do they see the rates going in the next 12 months? Down. It's still potentially another 1.5% into the end of next year. So that kind of gives us a nice little idea that, hey, things are likely to continue improving. Yes, we've seen crypto do really well, but I mean, the stage is still set for that to continue into some part of next year at least.
Yep.
And we've talked about it, I think, last week specifically. If you want to go check out that episode about how sort of we expect altcoins to fire, even if Bitcoin does top at the end of this year. So I think that's another thing we'll continue to understand and distill. But again, if we go back to the market expecting a potential rate cut coming, we saw that obviously price into the market then in August. So you could basically see the sell-off as like, all right, well, the people that were playing ahead of the game looked to take a position into the news, saw the news, sold the news. So I think that's something we've seen rinse and repeat a couple of times. Feels like that's nothing too different to what we're seeing right now.
Yeah, I mean, like just like a few of the big coins have taken a bit of a hit this morning.
Yeah.
Like ETH and Sol in particular, like they're down over 6% each in 24 hours, which for coins that big, which have, you know, market caps of over hundreds of billion, particularly in ETH's case, like that's a significant drop, which we don't see very often, but it's obviously telling. We've spoken about before that we don't typically like to buy green days and we don't sell red days. And so I saw that drop this morning and I thought, I have a bit of cash on the sidelines. Why don't I?
Oh yeah, what'd you nibble at?
I just dollar cost average into some of my existing positions, so Solana and Hyperliquid.
Yeah, I think if we look at the actual impact that the recent sell-off has had in the market globally, Derivative markets have only become more and more popular over the recent years. We saw a $1.8 billion wipeout. So that's on long and short positions. That's, I think the second time we've seen a move like that this year alone. I think the last wipeout of this magnitude was June, when we saw, I guess, a little bit of panic then, I think. But again, I think this is nothing more than a short-term correction. I don't think we're panicking in terms of thinking tops in. It still doesn't seem like that would be the case, but I think this is a good time just to go back to stuff that we've talked about on the show previously a lot of the time, that, hey, we're in the road to high prices for Bitcoin. We do expect double-digit drawdowns like this to come, and they're very frequent. So this is just another example of what that looks like for people that are sort of wondering, what does altcoins selling off even when Bitcoin's looking bullish look like? Here's another one.
This reiterates the importance of having like a strong Bitcoin allocation in your portfolio, because even like ETH, which is the second biggest coin, is down 6% in a day. Bitcoin, which is, suffering from the same fate, is only down 2%, which is pretty significant for Bitcoin, but still, it goes to show that Bitcoin has that sort of strength, particularly in the tough times, and so like your portfolio bleeds a bit less than say if you were to hold a big allocation of altcoins.
And even like Hyperliquid, which, I like that you point that one out, because that has been one of the ones ripping and tearing for, I reckon 2 months now. That has been the premier altcoin, I guess, if you had to sort of point to a few, and even that's down like 25% right now. So anyone who put a grant
in 7 days,
in the last 7 days, so like even if you've had $1,000, now all of a sudden it's $750 if you're buying it at the highs. So again, really, really can't stress more that whole approach that we do see rotation out of these things really, really quickly. But Bitcoin, still not faring too badly. I guess some other signs and symptoms that this was always potentially coming. We did see a lot of the altcoins further down on the risk curve, which I think when we look at the top movers, really throw in some huge, huge gains. We'll start off by breaking down some of the altcoins specifically that saw big moves in the last 7 days. But we saw frothy levels just on open interest. These perpetual exchanges where people go long and short for derivatives, they were overcooked, looking very hot. We even saw ETFs, which we always sort of look at as a bit of a proxy for what's the actual buying power and sustainability of a trend. Saw that really cool off on the 16th of September. So heading into that rate cut meeting, just the broader institutional money really started to slow down as well. Everything was there for this to be a technical pullback. So unfortunately, a lot of people might be looking for, what caused this dip? It's just mechanically how the market works, right? It's not sexy. It's not going to give people probably enough to go home and sort of rest easy on, other than the fact that this is normal. But this is the stuff that we always talk about on the show.
Yeah, I mean, welcome to crypto, right? Everything's looking good and heading the right direction, and all of a sudden you had this massive pullback, which is not uncommon.
No.
We've seen far worse before.
You're right there. You definitely have seen worse. But let's look at some of the golden nuggets amongst a sea of red at the moment. Like, they're still down when we look at the 24-hour performances, but in the last 7 days, Aster. So again, we touched on it for a third time, but Hyperliquid, it's been shown to be very much a fan favorite. The whole idea that people are trading more and more on decentralized exchanges, and these protocols are reinvesting back into themselves. Aster is one that's been backed on the BNB network. I think it's been incubated through BNB Labs. I could be wrong there. But again, it's this whole new sort of meta where there's future order books on decentralized exchanges, and it's gone nuts. It's up 1,700% in the last 7 days. So I saw this happening on the weekend, and I followed it as well. I didn't really take too much of a position on it, but the methodology was, hey, look, it's basically a copy-paste of Hyperliquid in terms of tokenomics and what it does and how it feels. But it was just severely undervalued. So even if it took market share away from Hyperliquid, the token was suspected to be just really undervalued. So that was just a general consensus from speculators and the market that I was watching on X at the time. We'll see if this one continues to show any strength. But, we've seen in the past, like when the BNB network sees a bit of a bid, can sort of see some sort of structural shift there as well, that we might continue to see that as a trend. So I'd be continuing to watch Aster if it was me.
Yeah, and just on that, BNB hit $1,000 US for the first time.
That's
in history.
A good point.
So BNB is just going from strength to strength quietly, right? It kind of flies under the radar. compared to a lot of these other coins, which seem to steal the spotlight, like XRP and ETH and
That's
Solana.
true.
But BNB is right in the mix. But it's interesting. Asta, I was looking through X, and a lot of people are having a go at sort of the tokenomics or the token allocation of it, and they're saying like majority of the token allocation is locked up by Binance itself, and so this seems like a bit of a strategic move by Binance to launch this coin, which is a BNB native application, which BNB is their chain, and so it looks like they're going to benefit very, very largely off it. And I don't know if it's listed on other exchanges, but it seems like they're dominating a lot of that trade volume.
Yeah, they are, and I think you got to call it for what it is, right? Like, there's definitely some movements that are probably sponsored. So yeah. I'd say, like, at the end of the day, like, if the BNB ecosystem's still somewhat growing, which it's pretty big in the Asia region, it's not so much so big anywhere else, to be honest. I don't know why that's the case, but, if it sees volumes and there's people using it,
Yeah, and that's not to say, like, that Binance is going to dump on everyone who buys Asta. Like, that is not in their best interest, but obviously it does have a bit of a sponsored feel about it where, like, they're really trying to push this hard, and it seems to be paying off.
And that's another key thing I would say we should be on the lookout for, especially people at home trying to wonder, okay, well, I missed this one. What does the next one look like? Well, let's think about chains that don't have a hyperliquid or Asta style feature on it right now. So let's talk about Solana. Let's talk about Base. There's one that I've done a bit of research on and found called Bullet on Sol. It's not live yet. I believe it might have, it's in testing phase or in a test net phase. There's two good things about them. I feel like they've got a good product market fit. People want this. We're seeing people want this, and it's only growing in popularity as it's much cleaner to use them, how these applications have been in the past. But airdrops, they've also been pretty common patterns for airdrop allocations. So Hyperliquid, pretty well-known airdrop for that one. We also saw last year, like Grift protocol, and I think even Jupiter, like they all sort of had airdrops as well for using their decentralized perpetual exchanges.
So just break it down for me, because obviously you said Bullet on Solana, but Solana already has Jupiter, which we've talked about before, as sort of like their go-to decentralized exchange. But in this situation, Asta and Hyperliquid, which you mentioned before, they're different because of
the order book and execution of the trades. So there haven't been the most clean and unclunky experience to do perpetual trading or like futures trading on DeFi applications in the past. So Hyperliquid did change that. That was like a novel solution. And now you're just basically seeing the copy paste effect, right? We're just going to see the same tech just be rewrapped into something else on a different chain, have someone else backing it, having maybe some other sort of tokenomics to it, like different rewards, etc. Another one that's quite popular, and I think it's backed by Arthur Hayes' company, Maelstrom. It's Lighter, Lighter.xyz. Again, these things are just coming. They're popping up. They're likely going to have airdrops. Yeah, it's more the execution style that they use that's different.
There you go.
Other than that, I really got nothing other than two more that I thought were pretty interesting. Well, this one's less interesting, but DXE, it's a DAO builder. That was the second highest runner for the last 7 days, up 50%. There was some announcement that they were basically integrating a solution with an AI capability. So DAOs, again, it's about building communities, building ways for groups of people to manage money and funds and allocate into things like NFTs or anything else. Can just be even meme coins. So this one likely for me, I just think is potentially just whales moving price up and the market just, again, looking for something to allocate risk into. So we did see quite a few small caps go crazy over the weekend, but a lot of them have retraced.
Well, let's touch on that because obviously, like we usually touch on the top movers heading upwards, but the market's bleeding a little bit today. So why don't we look at the top movers that are heading downwards, see if there's any trend that we can pick up on. So just looking at the last 7 days, like Pi. Pump, which we spoke about last week being a top mover, and we see this often, right? If something, heads up 20-30%, like typically people are going to start to take profits on that project, and it's going to have a drawdown, and that's where people can get caught out because they chase, the gains. So, this is not uncommon for like those small altcoins to have these big swings up and down. Conflux also down 11%. World Liberty Financial, we know that to be the Trump family project. Have you been following that one much?
Yeah, I don't think it's something you want to fade just because, again, if the most influential family or powers that be are sort of jumping on a emerging market, which crypto is, let's be real, and they're going to attract investments from people they know, surely they're going to get them to invest in World Liberty Finance. So if there's some sort of demand there, I think it's worth watching.
I know, is it Eric Trump, his son, or Donald Jr.?
Oh, I think it might be both of them.
Yeah, but I know they're copying a lot of heat for just, jumping on the coattails of their dad to try and make a huge profit on some crypto project.
Yeah.
And I don't think they're trying to shy away from the fact they're doing that. But it's abundantly clear. So just be a bit cautious of that.
Oh, absolutely.
They are riding that hype to make a profit.
What else is losing?
Nothing of too much note, like Immutable X. That's been in the green recently, so that's obviously retracing. Celestia, Lido, DAO. I mean, Hype is down 7% in the last 7 days. So, yeah.
I do have one other one that's an interesting one that's up as well. So Story, ticker IP, it is up 40% in the last 7 days. Now, this is a peer-to-peer intellectual property network. So people that have creative or scientific IP, it's a way for them to sort of capture that in a programmable way. So I think that's pretty interesting. I think there is quite a bit of buzz about this one recently that I've been hearing. It was a NASDAQ-listed company that's now been converted into, again, another crypto treasury that's just basically looking to announce that they're buying IP. And that's their strategy. They're going to buy this token and offer it, obviously, through the stock market. So, again, that's a $82 million buyback of the token that they've announced. So, yeah, it's going to be their core reserve in their treasury. So, interesting that we're seeing more and more companies just rebrand into crypto strategy treasuries. Just keeps happening.
Yeah, interesting. Okay.
Why don't we just touch on the thing everyone probably wants to hear about, XRP breaking records?
Yeah, people love XRP, don't they?
Yeah.
So the big story here is that the XRP and a DOGE ETF were launched last week. You said it, the XRP ETF, which is the ticker XRPR, traded $37.7 million on day one, setting a new record for volumes traded for any 2025 ETF launch, which is hugely significant considering there have been 710 ETF launches to date this year.
Market wants it.
The market wants it. I mean, we saw it with Bitcoin, right? Yeah. Bitcoin broke records month after month. In its first 8 months, it already overtook gold ETFs that have been around for decades. It's sort of just continuing that trend. And obviously, we know there's a huge sort of demand for XRP, particularly after that court case came to an end and sort of had some free runway without legal troubles.
Yeah.
So it's really good to see. And then the other one is the Dogecoin ETF. So that's ticker DOGE, was closely followed with $17 million on its first day of trading, which puts it in the top 5.
Mate, crypto.
Pretty significant, right?
People want it. Yeah, it's good. I think the same analyst, Eric Balchunas, you can check him out on X and follow him. He's pretty good for keeping on top of what's happening in the ETF land for crypto specifically. There's still 35 other ETFs, I think, waiting to be approved and in the wings. So
this is what's interesting. So the SEC are currently going to adopt a generic listing standard for crypto ETFs. Now, they've already done this for, stock ETFs, bonds ETFs, but they're looking to launch this maybe in October this year. So what is that? Next month. That's what I'm hearing. And people are probably wondering what that means, and it probably sounds pretty boring, but I'll explain why it's hugely important, because it's like another coming of age moment for crypto. We've seen this before with, the launch of the ETFs and, just Bitcoin heading over 100K. It's just another good news story, but it also means companies launching crypto ETFs are going to be able to do so much easily, get them approved way quicker. If they meet all the criteria, it's basically guaranteed to get approved. Where in the past, it was up to the discretion of
very lengthy
the commissioners. You know, when we saw the Bitcoin ETF approved, it was
it's 4 phases.
3, it was a lot of back and forth, and then at the end, I think 3 out of the 5 SEC commissioners approved it, so it almost got denied. What it means is, as long as a filing meets clearly articulated requirements, the SEC approval is virtually guaranteed. It's going to speed up the application process to be approved from about 250 days to 75 days, so way quicker. And this actually happened in 2019 for generic stock, bonds, ETFs, where they created this sort of generic listing standard. And not only did it increase the amount of ETFs that got approved, but it also significantly increased the amount of ETFs that were being applied for.
Okay.
So don't be surprised once we do get this listing criteria standard, the amount of asset managers trying to launch crypto ETFs, and I'm not just talking about Bitcoin and Ethereum, I'm talking about, go down the list, like XRP, DOGE we've seen, Sui, Solana, like Solana's...
There's other meme coins waiting.
Massive.
And there's been no like multi-asset baskets either, like none of your like Bitcoin, ETH, Sol, like there's going to be all these different combinations.
Yeah, exactly. And it doesn't necessarily mean like, say if Chainlink gets an ETF, it doesn't mean it's going to get inflows guaranteed because obviously a lot of things need to line up. There needs to be demand. But I think it does sort of prime that for when, there is demand and the fundamentals are looking strong, particularly from a macro environment, like it really puts it on a platform to send it. So I think it's really good news.
It's going to come hot and heavy. It's going to be fast.
It will. I wonder, do you think they'll ever get to a stage where there's just too many crypto ETFs?
Probably. I don't know. I'm more concerned about these like crypto companies that keep starting up. Like they literally just buy, like this one was like a distilling company and it's just been converted into like IP.
Yeah. Just trying to.
Well, it's just trying to give people.
Bandwagon.
Well, it's all like trying to give people exposure to volatility, which the stock market's been a bit dry of. So I think they're just trying to like cater for what the market's going to want, like more speculation.
Well, interestingly, Michael Saylor came out and said something, this is not verbatim, but he was saying something like the institutional adoption and demand for Bitcoin is going to make it less attractive for retail. Because think about it, from a retail perspective, people often look at it as like getting a higher return than they can on the stock market, right?
Yeah.
Whereas now with, the maturity levels it's hitting, particularly because of that institutional adoption, are we going to see the returns are less and less? Yes, it's a less volatile asset, which is what we want to see. But from a retail perspective, they're going to look to other altcoins and move away from it.
And that's where I think, to answer your question, like it'll just be how much consumer demand will there be for a lot of these speculative ETFs? Because let's face it, like if there's a fart coin ETF, it's not going to be, the likes of like Microsoft investing. So...
Never say never.
Never say never.
Yeah. You never know.
You never
As I said, if the fundamentals line up.
Yeah, and hot air rises. So.
Well done. Well said. Let's leave it there.
Oh, okay.
Unless you have anything else to add.
No, I do have something else to add. I want to wish all of our boys and girls well this weekend. We've got the Lions up against the Cats this weekend. Hopefully we can bring it home for the big one, the big granny.
Two in a row, back to back.
Yeah, and we've got the Bronx, obviously. We're locals, avid supporters, so I want to see them get up. And the Wallabies too. It's a big one for sport.
It's a massive weekend, but I think it just goes to show that Brisbane is the sporting capital of Australia, and Melbourne cannot make that claim anymore.
Got that.
So apologies to the Victorian listeners.
All right.
Let us know what you think about that
one. And scene. All right, thanks, guys. We'll catch you again next time.
Thank you, guys. Bye.